Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It. Today I have Andy Cook of Tettra coming to us from Boston. Andy, how's your day going?
It's going great. Thanks for asking. How's your day going?
It's pretty good. It's kind of cold here in San Francisco, but it's bright and sunny, and it's Friday, so I'm happy. All right, let's do this. So you're CEO of Tettra. What is Tettra, and why did you start this business?
Yeah, great question. Tettra is a knowledge sharing and management tool. We basically give you a central repository to share all the things that a new team member, an existing team member would need to know to do their job and get the right decisions made faster. So that's everything from the more obvious stuff like what's the vacation policy? Like, do we have President's Day off? To the more in-depth things that are company specific, like, hey, how do I extend a customer's trial for a customer success or support team? Or where's the asset for this marketing campaign that we ran, things like that. And then we hook it up to Slack so that as people are asking those questions in the context of a conversation, you can just pull in the answer right into Slack. And that basically saves the knowledge keepers, the people who know how to do all this stuff, a ton of time, not having to answer the same questions over and over again.
Interesting. Yeah, I think you were describing yourself as a wiki for new team members, kind of. Is that accurate or?
Yeah, so basically how we got initial traction, which is always a good hack, I guess, is just to use the language that people are already searching for. So when Slack blew up and then they launched their platform, I think in October, or it was December 2015. So it was about 3 or 4 months after we started. We had been building this knowledge sharing tool, also known as a wiki. Wikis are basically really outdated and static often, and our tool is more powerful. But we saw that all these companies were looking for a wiki for Slack. So the easiest way to get customers in the early days was just to say, we're a wiki for Slack. And that's how we closed our first 100 customers. But now the product's just so much more powerful that it is a knowledge sharing and management tool, but you could call it a wiki.
I like that growth hack, though, of figuring out what people are searching for and use that as your tagline and your messaging when you need to. That's pretty clever. Yeah.
Yeah, thanks. It was a good way to get traction, and we still rank #1 for Wiki for Slack. So it's been a really good acquisition channel for us to grow over time.
Are you still only on Slack, or are you beyond Slack, or in addition to Slack, are you on other channels?
So Slack was the first platform that we built on, so the most momentum, but the product actually works beyond Slack too. You can sign up with an email address and invite your team or anyone else via an email address and use it as a standalone knowledge sharing tool. Whoops.
We'll edit that part out. It's okay.
Not bad. Yeah. Let me back up. All right. So the first platform we built on was Slack. That was just because they were so popular and basically the first chat tool to market. And then about 18 months in, we actually added email sign up to the product as well. And that was because people kept coming to us and saying, hey, I don't use Slack, but I need a knowledge sharing tool and I want to use Tettra. Can I do it? So now you can sign up with an email address, invite any team members you want with an email address, and then you can always bolt on Slack later, but you can use the product on its own.
It's interesting. So you started before Slack launched, right? You guys, or before they announced their app platform?
We started October 2015. We had been trying to build, we had been building a product. We built a whole initial version and got 25 or so customers to agree to use it, did a bunch of customer development, built the thing, gave it to them, and then only 1 or 2 teams actually used it, even though we had talked to a lot of TV people beforehand. So we started in October. Around December, we were when we gave the beta, I'll call it, to those teams, we're like, all right, well, this isn't going to work. Like, obviously, they're not going to use it. What are we going to do? And so fortuitously, at the same time, Slack launched their platform. So we like watched the demo videos, looked at the documentation, and then went back to all those teams we were talking to and asked them like, oh, well, what if we could take this thing that we're building and then hook it up to Slack? Would you use that? And the feedback we got was like, oh my God, that's exactly what I need. Like, can I sign up for that today? Like, how do I use it? So then we were like, give us 2 weeks. So we scrapped the whole thing we had been building for like 4 months and built a new version 100% on top of the Slack platform in 2 weeks, launched it, and we got like 150 signups in 2 days.
Wow, that's amazing. I mean, that's a good story of, it's both a pivot and an evolution, right? I mean, it's not a pure pivot. It's kind of like shifting focus slightly to really capitalize on a rocket ship that was, taking off, right?
Yeah, exactly. So, the core problem we were trying to solve was the same, which is how do you share knowledge within an organization so that people can work together better and faster and make the right decisions faster. But the delivery mechanism for, okay, well, how do we get people to actually use the product? Like, what is the hook that gets them to use it? That was like a pivot or an evolution. So the advice I usually give to people is like, focus on problems, not ideas. And when you focus on a problem that you really want to solve, one, it drives you over the long haul, where like, okay, well, even if like the specific way that we're solving this problem, like the idea we have is wrong, at least you're able to solve the problem that you really care about and you're passionate about over the long haul. So that's like basically what we did.
Did you have any concern about, hitching your wagon to a single vehicle like Slack? Is that kind of a risk? You live and die by the success of the Slack platform, or if they introduce their own version of this? I mean, I don't know. How do you process all that?
Yeah, that's all good questions and all things you have to think about when you decide to build on a platform. So for us at the time, the decision we made was, one, it's like we'd done some research on the Slack platform from what they had released already, and it seemed like they really wanted it to be an open platform from the beginning. So we were like, okay, well, at least for the foreseeable future, because they're trying to get more developers on Slack, they're going to keep this thing open. So we were like, all right, it'll probably be open for a while, and we're basically failing up until this point. So what can we do to, light a match and like kickstart the reaction and get it going? And the shortcut was basically to ride the wave of another company's platform, which was Slack. And I think we were one of like the first 50 or so apps in their app store. Mm-hmm. And that was a huge acquisition channel for us in the early days. So that being said, you don't want to bet the farm on a platform because they can always cut you off, or they can build a competitor, or they can acquire one of your competitors, and, you're in the dire strait at that point. So that was one of the reasons, and also customer feedback, but that was one of the reasons why we built beyond Slack, and you can like now sign up for the product with an email address too, so that even if one of those things did happen, we at least have a product that can stand alone on its own. And I actually wrote a blog post about this probably like a year or so ago, and I'll share that with you. You can share it with this too.
Sure. Yeah. Okay. Well, we're going to get the fundraising. I didn't mean to go down such a path of, platform and growth hacks, but how much of your business is today built on Slack, or comes from Slack platform, or have you really diversified, away from it?
Yeah. So for the first 18 months or so of, I'm trying to think of the time on here, probably like 18 months, maybe a little bit longer, we were Slack only. You couldn't use the product without Slack. It was impossible. You had to sign up with the Slack team. So up until that point, it was about 100%. I haven't run the specific numbers recently on like what the split between Slack versus not Slack is, but based off of my gut, I would say it's probably still majority Slack or people signing up with email and then adding on Slack later once they decide they want to use Tettra and they trust us and they'll authorize the Slack permissions to do that.
Gotcha. Okay, let's talk about raising money. So how much have you guys raised, and was it angel, friends and family, VC? What's your capital stack look like?
So the total amount we've raised to date is $929,000. We did that in a few different phases. The first phase, so the first 6 months, we self-funded the business ourselves. And I was lucky that my first startup was acqui-hired. So they basically bought the talent from the team by HubSpot 2 years prior to starting Tettra. And then I had also worked at HubSpot too, and had a real salary and tried to live frugally to bank money. My co-founder did that as well. That's where we got to work together for the first time. So we both had personal savings, which allowed us, probably, I forget the exact amounts, but like 6 to 12 months, depending upon how lavishly we lived. We self-funded for the first 6 months. Then we launched the Slack version, which immediately got traction, and we basically realized okay, this is a much better idea than what we were working on. So same idea, but much better delivery that people actually want. So that's when we went out and raised a seed round, and we raised $904,000 during that time, which I can dive into in a little bit. And then most recently, we raised another $25K, and I will be candid and transparent here. That's because we were going to go out of business, and we raised some bridge funding to get us to profitability, which we hit last month. But that's the makeup of the total.
25K was the bridge that got you to profitability. Like if you didn't have that 25K, you guys would be not. I would not be talking to you. Is that true?
I mean, it's less dire than that because, it was we had some money left in the bank. We dramatically slashed expenses over the previous 6 months. I put a little bit of my own personal money into it too.
Yep.
But we were also growing revenue at the same time too, and we were making money. Like our monthly recurring revenue was around 20,000 or so, and our burn was between 27 and 30,000. So it was a fine line between we can get to profitability or we'll run out of money. So we raised the 25K as a buffer from our existing investors, and they're great, and they gave it to us, which I'm thankful for every day.
Yeah, no, that's great. Okay, let's rewind the clock. So you guys, you launched the app, wasn't working, people weren't adopting it. You then relaunch it on Slack. It immediately takes off, and so you use that momentum to raise that 900K. How did you, identify the investors? You worked at HubSpot, so was it all HubSpot Mafia guys and gals that,
Yeah. So our very first investor was actually my former boss at HubSpot. His name's David Cancel. He was the chief product officer. And I reported directly to him for a time because I was working on a startup inside of HubSpot. So it made a lot of sense given he's a 5-time startup founder. So he was our first angel investor in. And the way that worked out is we had decided to raise money in the morning, and then we happened to have a beer scheduled later that day with David just to catch up and hang out. He had left HubSpot and started a company, and we were gonna swap war stories and all that good stuff. So we went to his office, and we were hanging out, and we were drinking a beer, and then after an hour conversation, he said, okay, well, if you guys raise money, let me know. And we were oh, well, coincidence, we're raising money. And he's oh yeah, and I was yeah, are you in? And he's yep, I'm in. Great. So I was okay, how much? Because you always have to ask how much, right? So he gave us his number, and then I just repeated back okay, you're committed for the amount, first investor, boom, done. So that one was fortuitous, where David knew me well. He knew Nelson too. He had worked with Nelson at HubSpot for 4 years, and he trusted us, and there was that connection. But I will say that from my very first startup, Rentabilities, we tried to raise money from David and he said no. So like that's one thing that I think is really valuable with fundraising is you kind of, and this doesn't help like if you're trying to raise money right now, but thinking ahead a little bit because, startups are more or less a career or a long-term game.
Yeah.
You need to build those relationships over time so that people can get to know you and see a pattern of execution. And then when the time comes when like you need to raise money, you already have that relationship and it's a lot easier than trying to raise cold.
Yeah.
Yeah. So then from David, we had talked to Mike Volpe, who is the former chief marketing officer of HubSpot and now is chief marketing officer of Cybereason. And we had got to know him a little bit at HubSpot too. So he had mentioned that he would be interested because he really believes in wikis as a way to scale culture and communication inside of fast-growing organizations. He had used wiki heavily inside of HubSpot to do that. And so we went back to him and he agreed to invest as well. And then he also mentioned that he could try to bring in this entity called the Boss Syndicate, which is a syndicate that Accomplice, which is a venture capital firm, backs in Boston. And it's run by TJ Mahoney. And the way it works is that Boston companies can get, if they get an angel investor in Boston who's considered a boss, there's like 40 of them. The boss can take your deal to the Boss Syndicate and convince them to come in. And that's like a $250K check that comes through an AngelList syndicate. So the whole idea for Accomplice is like they have these bosses who are probably working with a lot of startups and vetting them. And so they're doing a lot of the due diligence and it's social proof where if you can get a boss, then the syndicate will come in on the same terms. So we got that too. So we had like 300K or so out of the gate pretty quickly.
Yeah. That's really interesting. The boss. And so are the 40 or so bosses all or primarily ex-HubSpot folks, or is it more diverse than that? Is this truly the HubSpot mafia, or is it
It's more, the Boss Syndicate's way more diverse than that. So there are ex-HubSpotters. So like David Cancel's a boss, Elias Torres, who's his co-founder at Drift, is a boss. Mike Volpe's a boss, but there's also others too who have never worked at HubSpot, like Wing Chen, Diane Hessen, a few others. There's a list online, and if you're a Boston founder, you can check it out. Yeah, I mean, it's a great program. I think it's really smart of them, and it really helps Boston too because there's not a lot of like super angels here who can write like a 100K, 250, 500K check. So it basically allows angel investors who are really helpful to like write those bigger checks.
Yeah, I noticed Accomplice just teamed up, I think, with AngelList, right, to have this sort of scout fund. I don't know if I'm quite doing it justice.
Yeah, it's called Spearhead. Yeah, so the idea there, it's again super interesting. Accomplice is really innovative in this space. So what they've realized or what they're testing, I don't know how it'll pan out, but basically like current operators hang out with other startup founders a lot and swap stories and learnings and all that good stuff. And so the idea is like operators probably have the best insight or really good insight into who the best founders actually are, but they haven't had an exit or liquidity yet, so they can't invest. So Accomplice's idea is, what if you gave like a fund to those operators so that they could invest in the other operators that they're friends with? So it's like basically the people who are closest to the ground are the ones actually doing the investing. So they just launched that. It's called Spearhead. I think they're still taking applications for it too if you're an operator. It's definitely worth checking out.
Did you apply? You're an operator? Are you?
Good question. So I thought about it and I decided not to. And the reason being is that I have very minimal time beyond Tettra, and the time I do have, I want to spend on my life, like exercising or, being out in nature, or hanging out with my fiance and my friends, all that good stuff. So just adding another thing to my plate right now, given how busy I am, just didn't seem realistic. But maybe if we were further along and, our team wasn't tiny and I wasn't wearing like 15 hats, my thoughts might have been different there.
Sure. Yeah. It's an interesting dynamic. I think someone made the joke to me one time that AngelList is like crowdsourced deal flow for AngelList fund, right? And it's kind of somewhat true, right? I mean, and I think Accomplice is another extension of that, right? Where, you're kind of just putting out deal flow tentacles everywhere, and it's smart.
Yeah, I mean, it's smart. And like the other interesting thing is that these different mechanisms for raising money really open up the opportunity for people who normally wouldn't get funded to get funded, right? Mm-hmm. So, like this time around when I raised money, it was a lot easier because I had worked at a well-known company that had an exit. Yeah. I'd also got to know the executives over time because I had the fortune of working on like a skunkworks style project that was in front of the executives constantly. So that was lucky for me, but like not everyone has that opportunity, for whatever reason. And so like having a lot of different avenues and a lot of different viewpoints and people with different backgrounds investing money, I think is a great thing for the ecosystem.
So let's finish up your round. So you had David Cancel, Mike Volpe, a couple of HubSpot. Had HubSpot gone public at that point or not yet?
Yeah, they'd gone public a year before.
Okay. So these guys are liquid and their stock is not locked up anymore, so they can start. Did you see a rash of, new money come in the Boston startup scene after HubSpot went public and after lockup period expired? Was there a lot of, a brief window sometimes? I mean, sometimes you see this, right? There's this window of all these newly minted angels that start doing deals. Did you notice any of that?
I mean, not especially. I mean, maybe I didn't notice because I was so busy. I do know at HubSpot specifically, it's a very entrepreneurial company still, even with the size that they're at. And the founders are very bullish on hiring people who are entrepreneurial. So the idea is like, you can go work for HubSpot, and this isn't definite, but like you can go work for HubSpot, do really well there, demonstrate that you're capable of getting stuff done and executing and that you're really smart. And then more often than not, the HubSpot executives will back you should you decide to choose to go start your own company. Like they like people who are entrepreneurial and want to do great things and start companies. So there's probably, I mean, if I went back and looked at the data, there's probably an influx of the HubSpot executives funding HubSpot mafia or ex-HubSpotters, and probably like a bit outside of HubSpot too.
Yeah, interesting. So Mike Volpe, David canceled the Boss Syndicate.
Yeah.
Then how'd you raise the rest? Was it just introductions from David and Mike, or did you, have to build a funnel and work a funnel, or was it more organic?
Yeah. So this is where the story gets somewhat harder. So we had this like 300K, and we were like, oh, okay, well, we already have 300K. And initially we were targeting 550. So we were like, all right, we're halfway there. This is easy, right? To say that with a grain of salt. But so we're like, all right, well, let's try to raise more. Let's try to raise like a proper seed round, because we were trying to raise just like a small round to like pay ourselves, hire like one, maybe two other people. Yeah. Kind of like validate the idea more. She's like, all right, well, let's raise a seed round. So I came up with a number of like 1.1 million. And then my idea was, let's go to all the seed firms that exist in Boston. We already have this momentum, talk to them, get like 2 in, close it out, and like keep the cap table small. So we did that, and we went to go talk to all the seed firms. Mike did intros for me, and everyone got back to me. I did like probably over a dozen meetings in like a week or two, and everyone said no. And we were in this like funky spot where the amount that we were trying to raise at that point, which is like 1.1 million, one is like a weird amount. Usually like a institutional seed round is like 1.4 to 2 or whatever the upper bounds is, or like at the time, like a pre-seed round was up to like 700, 750. So we were kind of in this no man's land of like bigger than a pre-seed, but smaller than a seed. So like no one could really get behind it. So that was a mistake. The other mistake too is that we basically had a prototype and like an idea, but not a lot of traction at the time. So if I could go back and do it again, I would have just focused on angels exclusively at the beginning to raise the pre-seed round, and then got more traction and then went back to the seed firms. Or I would have got all the angels in that we eventually got in and then gone to the seed stage firms and tried to like raise a bit more money once we had the like 20 or so angels that everyone knew in. But we like got the 2 angels, jumped the gun, went to the seed investors, and didn't have the social proof that we needed to pull that off.
Interesting. So you would have either waited for the social proof or the traction in the product before really going and hitting seed venture funds. Is that correct?
Yeah. And like the reason, so at the time, like we had only been working on this thing for about 6 months, and we had only been doing the Slack connected version for about a month and a half. So we didn't really have good answers to like, oh, well, what's like, what do you do about the platform risk here, right? Like we hadn't really figured it out. We were just excited like anyone was signing up for this thing. And we didn't really have a good answer around like, what is the product vision? And like a mistake I made, and I guess this is just me because I'm really honest and candid, which probably makes me not great at fundraising, is I just told the truth, which was like, yeah, well, we don't really know. But in my experience as a product person, the best thing to do is talk to customers, figure it out, like get their opinions, build, iterate, keep pivoting. And over time, like we'll get more clear on that. Like we don't have a roadmap. Like having a roadmap beyond a month is probably not smart because it's going to be wrong. Like we're literally going to be. So no one liked that. It's like, even though everyone knows it's the truth, they don't want to hear that. They want conviction.
Yeah.
So like those are the mistakes that we made. But it ended up working out. But there was also like, once we realized like, okay, this, seed round idea is not going to pan out. Like it's not going to happen. We can't get anyone in. We were like, all right, let's just go back to our original 550 target, raise it all from angels. And like, we'll round it out that way. So at that point we had more than half again. So yeah, things got bad, then like got optimistic again too.
Interesting.
Yeah. And then from there, like once we had the 300, we did, an actual angel list syndicate. So Mike Volpe opened up his angel list syndicate. The boss syndicate immediately came in and funded 250 of Mike's angel list syndicate. And I think we were targeting 275. So we were trying to get another 25K through this angel list syndicate. And we filled that up almost immediately. And again, that was, we had done like some legwork to make sure that went well. So like I had reached out to like some smaller investors that I knew who might be interested in being like, hey, we're going to do the syndicate. This would be a good way for you to put the money in, but like, we don't have to add, 30 people to our cap table. We can do it under one entity. So it's a good way for like smaller investors to get in, like without having to do all that paperwork that we would have had as founders.
Interesting.
So that we ended up doing like another 33,000 or so through the syndicate. So like 333,000 or something like that.
Did you, I'm sure you did consider at least, did you consider pitching the Slack? Doesn't Slack actually have a venture fund that is funding seeding things on their platform? Did you approach those guys or not? Yeah,
so we did talk to the Slack fund. It's run by Jason Spinell. Super sharp guy, super helpful. I really like him. The thing with the Slack fund is that they follow on institutional investors. Oh. So the Slack fund doesn't actually set terms. They basically follow on through other investors. So the way that works is you have to get an institutional investor. set the terms, and then Slack will come in at the same terms.
Gotcha. And a syndicate it doesn't count in their book.
Yeah, I don't. At that point, it really didn't. I think at that point too, Jason wasn't even running the Slack fund. Like they had announced it, but they hadn't hired Jason yet. So it kind of was this like limbo state too. Cause again, we were like super, super early on the Slack platform. But yeah, I think they are looking for companies that are venture backed by a reputable firm. And like your goal is to build a big business and be connected to Slack. That seems to be the case.
Gotcha. Okay, let's kind of come into more recent history. So you started to raise again, but was it did you set out to actually raise like a proper seed round, or were you just trying to raise this bridge to keep the thing afloat and you didn't want to raise more money? What's the latest?
Yeah, good question. So yeah, from the syndicate, we ended up raising another $600K. We were oversubscribed, but there was like probably 3 or 4 weeks between ending the syndicate to getting the next checks in, where like there was no activity, no one got back to me. I put together a whole list. We were actually using Founder Suite to manage the process, which is great because it basically stopped my co-founder from constantly asking me for updates. He'd be like, what's going on? Just be like, go check Founder Suite. So that was great. So we'd gone through like the list and pinged everyone and no one really got back to us. So that was like a moment where I basically felt like we weren't going to get it done. And, you know, we had a conversation where I was like, I don't think we're going to be able to do this. What are we going to do? And we're like, oh, maybe we'll just take the 350 and like keep it to just the two of us. I don't know. But then we ended up raising another 950. So then we used that to hire. Well, first thing we did was like open up a bank account so that we could incorporate and open up a bank account because we weren't incorporated when we started raising.
Oh, yeah. Wow.
To put the money somewhere.
Mm-hmm.
And then from there, like we hired a team, built out the product more, kept scaling our revenue and our customers, like learned a ton, iterated based off customer feedback, all that good stuff. So then in probably March of this year, we had a plan to go raise like a proper seed round of like $1.5 to $2 million.
Mm-hmm.
I think at the time we were probably at like 8K MRR or so when we started this. And from like what I had seen for a seed round, you wanted to be like for SaaS at least, you wanted to be between like 8 and 20K. So we were on like the lower end there. So we went back to all those firms that we talked to.
Yeah.
And we were like, oh, we've made all this progress. Like we have customers, all that stuff. But we just couldn't get people excited enough about the space. There's incumbents in it. There's, people were asking like, oh, well, how are you going to differentiate? Is there a $1 billion business here? Because the VCs, even at the seed stage, want unicorns. What if Slack builds this? All those questions. And we just couldn't get anyone over the hump to say yes. So I worked on fundraising for probably like 3 or 4 months as more or less my full-time job. And in the end of June, it became pretty clear that we weren't going to get this round done, and that with the current cash we had left in the bank, we only had money to the end of October. Yeah. So that was when I started making alternative plans. Yeah.
No, that's interesting. So that's I've heard this story from many founders, and I think it's good advice actually. When a round's not going to be coming together, you got to adjust course and right the ship, pretty quickly. Yeah. If you want to stay afloat.
Yeah, I mean, like I often find the best founders, and hopefully I hope to be one of those someday. But like really good founders are really risk averse. Which seems counterintuitive, but like you basically have a backup plan in case the plan that you're trying to do doesn't go wrong. And so for us, we had left like 8 to 6 months to raise the round. I gave it 3 or 4. It was pretty clear that we weren't going to get it done. So then we still had time to course correct with that backup plan that I had in place.
Yeah, that's good. Time to course correct. I like that. Leave yourself time to course correct if the round doesn't come together.
Always have a backup plan.
Yeah. Oh, a lot of founders wait too long. Very common mistake, right? You wait too long to start fundraising, and if you don't raise money in 3 months that you've allotted yourself, the company's done. So I like that you left some time.
Yeah.
How are you thinking about raising money going forward? Do you think you're just going to try and kind of build a cash flow positive business from here, or do you think you'll try again a year from now to raise a seed, or maybe it's a Series A? What do you think? Or are you so?
We did.
Yeah.
Yeah. Good question. So during the fundraising process, which is actually it's a good process to go through as a founder because it forces you to think about really hard topics that you might not think about and forces you to face the reality on a lot of things. Because VCs are smart and they see a ton of different companies and they can see patterns.
Yeah.
And so asking you all these questions for a reason, and you need to come up with good answers. So for us as a company, we did a lot of soul searching. I did a lot of thinking too personally around like, what do I want to do? And the type of culture that we have as a company is really built around product, and like listening to our customers and trying to solve their problems. Like that comes first and foremost over anything else, like including revenue. Like revenue is basically a means to an end to allow us to operate indefinitely so we can keep solving our customers' problems. So I quickly realized that probably the way we were going to have to scale this thing, because the B2B SaaS space is pretty competitive at this point, was hiring a big sales team and hiring a bunch of BDRs to set up those cold email sequences, and basically do outbound. And I personally hate getting those. I get like 12 to 15 outbound solicitations a day, and it kind of drives me furious. And I just was like, I don't want to do this. I don't want our company and our brand to be like an outbound sales machine. And our other ethos is just like, we believe that really simple, well-designed products with good UX win over time. It just takes a long time to do it. So our product is very simple deliberately, and every feature in there is in there for a reason, and it's based off of customer needs. But we tried inside sales, and it was like, oh, well, we need some more whiz-bang features that we can sell that are like magical and we can get people to pay us bigger money. And we're like, yeah, well, we don't want to build those. No one's going to use them. Why are we going to build them? So it just was like a mismatch of our founder DNA and like what we wanted to do. So we decided like, all right, we couldn't raise the venture capital when we tried to do it. And probably one of the reasons was that we truly didn't want to raise venture capital in the first place. We wanted to build a business that's sustainable. So let's just do that. So we decided to slash expenses, which I can go into too, if you're curious, and then figure out how to drive revenue up as fast as possible and get to profitability, which we ultimately ended up doing.
Do your, just coming down to the end here, do your angel investors, if you're kind of retrenching in some ways, you're not going after the venture model, which is scale fast, you're taking a longer term, slower approach. Do your angels give you pushback on that? Because most of the time angels want to see things that can then get sold upstream to VCs and, have that kind of ramp. Any pushback?
Not from our investors personally. And we're really lucky to have amazing investors who just want to see us succeed and want to help us get there. I think the thing to remember is that just because you're not going down the, put this in air quotes, traditional venture path, it doesn't mean you're not an ambitious founder. Like huge successful companies have been built without any funding. Like look at MailChimp or Atlassian, who we compete with, and even Basecamp on a smaller scale than those two. But those are huge companies that never raised any money. So, my mentality on this kind of stuff is like, you're probably going to end up in the same place, whether you raise a small round and then fund off of revenue, or you raise a bunch of venture capital, which is kind of like taking steroids. You get really big really fast, but it's not sustainable.
Yeah.
Like once you get past a certain point, you have enough revenue, like that becomes your funding source, and you can still build something really, really big. And if you haven't raised a lot of money, you've built up the right muscles over time on real strength as a team, like growth and acquisition and good habits around product.
Yeah.
Where at that point, you're actually probably in a better shape to execute much more leanly and operationally more excellent when like you've had that history of not like basically being venture funded. So that's my mentality on it. People seem to be on board with it. Our investors are excited about us, excited about it, and our team's excited about it too. It's a different path, but it fits us as founders really well.
Yeah, that's important. Awesome. All right. Well, I think we're coming to the end here. Any last words of advice you want to give founders, launching, growing, raising capital, or what advice would you give yourself if you were going back and doing this all over again? You've touched on a couple things, but anything else?
Oh, I have so much advice. I cannot pick just one. Yeah, I mean, I think the thing to remember with fundraising is like, one, it's really hard. So if it's not going well, like don't feel bad. A lot of this stuff comes down to just luck and happenstance. Like our very first angel investor ever was Dharmesh Shah in my first company. And I can trace that back to just happening to ride up in an elevator with him one time when we were going to the same talk that he was actually giving. And that was lucky. And then I capitalized on it and we built a relationship and he's funded both my companies, but like that was luck. So yeah, like don't get down, keep at it. It takes a lot of conversations. And then, yeah, the other thing too is I think like fundraising, raising money, like isn't success. Like you can get it, it's great, but it's kind of like the analogy I like to use is it's kind of like getting the ingredients for a meal. No one, when a chef goes out and gets a bunch of ingredients, it's like, yeah, they got the salmon and the asparagus. That's amazing. It's like they applaud them when they cook a great meal with those ingredients. And even once you have the ingredients, you can still burn them up. Yeah, it's like get the money, get the ingredients you need, and then get back to work, making progress and building your business and solving your customers' problems.
Interesting metaphor. Yes, I haven't heard that metaphor of fundraising like one of the ingredients in a meal, but it totally makes sense. Awesome. Well, thank you, Andy. This is great. Good luck with Tettra. Any for people who want to just check you out, it's tettra.co or .com?
We don't have the .com, so it's .co. It's tettra.co. Tettra with 2 T's.co.
Tettra.
Yeah, and then the other thing too is if anyone has any questions they want to ask, basically Andy G. Cook on all the social channels, and then my email is andy@tettra.co if anyone wants to reach out to me directly with questions too.
Awesome. Thank you so much, sir. Appreciate it.
Thanks for having me on, Nathan. Great to catch up. See ya.
You too. Bye.